Abbvie Stock, ticker symbol ABBV. This stock is down almost 3% year to date, underperforming the S&P 500, which returned nearly 12%. Abbvie reported a beat on EPS and revenue most recently, and for the upcoming earnings, all analysts expect another beat. People love Abbvie stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at almost 4% and 10 years of dividend increases. If we look at the total returns in the past 5 years, we see that Abbvie stock massively outperforms the S&P 500. So could this be the perfect time to buy Abbvie stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Abbvie do? Abbvie is a pharmaceutical firm with a strong exposure to immunology and oncology. Diving into the earnings, we see that EPS was reported at $0.77. An increase of 492%, so the company is recovering again. Revenue was reported at $12.3 billion, an increase of 0.7% year over year. Abbvie completed the acquisition of Immunogen, which is very nice. They also raised their 2024 EPS range, a decent amount, from 10.97 to 11.17 to an updated range of 11.13 to 11.33 dollars per share. Looking at the individual segments and drugs, we see that immunology is the biggest segment with 5.3 billion on a total of 12 billion. This segment is down almost 4% year over year. Their top drug Humira lost its patent and is decreasing for quite some quarters now. However, Skyrizi and Rinvoq are still increasing a lot here, so that's the positive part. The oncology segment increased 9%. Aesthetics decreased 4% and neuroscience, also one of the bigger segments, increased 16%, which is very nice. Both the eye care and other products decreased. It is expected that Rinvoq and Skyrizi are going to deliver 16 billion in revenue in 2024. For the 2027 guidance, it is expected to deliver 27 billion, 6 billion above previous estimates, so that's pretty exciting. They also expect sales to continue to grow into the 2030s. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Abbvie is a 275 billion market cap company. PE ratio is at 46, which is insane high, but it is highly impacted by the recent quarters. EPS is recovering already, which means PE will come down in the coming quarters. Later in this video I will show you my 3 price targets for Abbvie stock, so make sure to watch until the end. Revenue is at 54 billion and in this graph we see that revenue went up in the long run. Most recently it is stabilizing again after a decent decrease. This is also related to the Humira drug. Gross margins and operating margins are coming down in the recent years. The net margin is also going up and down a lot here, so this is definitely something to keep your eye on. For the EPS, it is pretty much the same story. Nothing really special to add here. Analysts expect that EPS will be flat in 2024. And from 2025 on, they expect 7 to 9% growth per year. To me, this looks pretty good. For the revenue, analysts also expect almost no growth in 2024. And from 2025 on, they expect 5 to 8% revenue growth. Return on assets is sitting at 4.3%, which is a low number. Return on equity looks really good, but the most important number, return on invested capital, is sitting at 14%, which is a great number. But it is much lower versus the 5-year average, which is something that I don't like. Current ratio is at 0.94, which is a great number. To me, this looks pretty good. Right now, Abbvie has 74 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Abbvie has 18 billion in total cash, so they can't pay down a big chunk of their debt, which is again something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, and to me this looks really good, but you want to keep an eye on the most recent decreases here. Shares outstanding are increasing, which is something that I don't like in general. But it has to be said that Abbvie Stock is at a premium and they did some acquisitions, so I don't blame them. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4%, which is a great number. Annual payout is at $6.20 and payout ratio is at 55%. I prefer 50% or lower, so right now they have 45% left in cash to pay down debt, do acquisitions, buy back shares and all other things. The 5-year growth rate is at 8%, which is a great number, also considering their yield and payout ratio. They increased the dividends for 10 years in a row, which is also nice. And if you take a look at these numbers, the dividends paid since 2013, we see that Abbvie did increase the dividends at a decent pace. However, growth is really slowing down here, so that's something to keep your eye on. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is kinda steady between 45 and 55%. To me, this looks pretty good. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Abbvie stock with the overall market, in this case the S&P 500. Next to that I added Merck & Co and BMI. On the 5-year chart we see that Abbvie had the highest return in this list with 146%. And keep in mind, this is including dividends. They are crushing two competitors and the S&P 500. On the 1-year chart things look pretty different with the S&P 500 having twice the return of Abbvie. On the 6-month chart, it is Merck that is having almost twice the return versus Abbvie, and they were also beaten by the S&P 500. On the 1-month chart, it is again the S&P 500 that is the winner here. Abbvie is sitting at a -6% return. Bottom line, Abbvie beats the S&P 500 and two competitors in the long run, but most recently the stock is lagging behind. So, could this be the perfect time to buy Abbvie stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 10, 12 and 14%. For the free cash flow margin I'm putting in 36, 38 and 40%. For the PE ratio and price to free cash flow I'm putting in 20, 22 and 24. These are pretty high numbers for a slower growing company, but they could have a potential mode with their new top drugs. My desired annual return is 12.5% since I get an easy 10% average annual return with owning an ETF. Right now, Abbvie Stock is around $155. I hit analyze and we see a lot of interesting numbers. And since the company is facing some issues with the EPS, I'm not focusing on the multiple earnings value here, since I expect this number to recover in the upcoming quarters. We have a low price target of $145, we have a mid price target of $189, and we have a high price target of $245. To me, the low to mid price target is the most justified here, meaning the stock could be undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Abbvie is that it is an amazing company. I used to own Abbvie stock, but I sold all my shares a few months back, when the stock price was near its peak. To me, the stock felt overvalued, so I sold my position and locked in my profits. Back then, I think it was the right decision. Now with the stock coming down in stock price and the company slowly recovering, I'm paying close attention to this one. Most fundamentals look really good besides margins and debt. Revenue was also slowing down, but the two new top drugs are really kicking in and the forecast looks very promising. From a dividend point of view, I really get excited with a 4% dividend yield and great growth stats. From a value point of view, things also look pretty good, but I wouldn't mind to see lower prices here. For now, I'm adding them to my watchlist and keep analyzing them from time to time. The company is recovering, but I think I still prefer a lower stock price to have a higher margin of safety here. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.